What happens when the very last Bitcoin is mined? No more new coins, no more block rewards, just 21 million forever. This isn't a theory, this isn't a rumor. This is written in Bitcoin's code, and when it happens, the consequences could reshape the future of money. Bitcoin didn't just appear out of nowhere in 2009. Its creator, known only as Satoshi Nakamoto, built it as a direct challenge to the traditional financial system, a system where central banks can create unlimited money at will. In Bitcoin, there is a rule carved into digital stone. The total supply will never exceed 21 million coins, not 21 million and one. Not, we'll raise the limit later if we feel like it. It's an absolute unbreakable limit unless the majority of the network agrees to change it, which would be almost impossible without destroying trust. That fixed supply is what makes Bitcoin hard money, more like gold than like the dollars, euros, or yen we use every day. Bitcoin works through mining. Every 10 minutes, miners use powerful computers to solve complex puzzles, creating a new block of transactions on the blockchain. For doing this, they earn a reward in new Bitcoin. But here's where it gets clever and slow. Every 4 years, that reward is cut in half. This event is called the halving. In 2009, miners earned 50 BTC per block. In 2012, it dropped to 25 BTC. In 2016, it fell to 12.5 BTC. In 2020, it became 6.25 BTC. In 2024, it's just 3.1 to 5 BTC. By the time we reach the final halving in the year 2136, miners will earn mere fractions of a coin per block. And finally, in 2140, the last tiny piece of the final Bitcoin will be mined. From that point on, the supply will be locked forever. So why does this moment matter so much? Because right now, miners don't just earn transaction fees, they earn newly created Bitcoin. That's what keeps them in the game, investing in expensive mining equipment and keeping the network secure. When block rewards disappear, the only incentive miners will have is the fees people pay to get their transactions confirmed quickly. If Bitcoin is hugely valuable and used by millions or billions of people by then, those fees could be enormous, maybe even bigger than today's block rewards. But if usage drops or competition from other technologies rises, fees could be too low to keep miners interested, threatening network security. Let's talk price, the part everyone's curious about. In theory, the moment the final Bitcoin is mined, the absolute scarcity could push prices into the stratosphere. After all, it would be the rarest form of money in human history. No other major currency has ever had a hard limit like this. But here's the counter-argument. Markets already know this is coming. The 21 million limit has been public since day one. That means traders and investors have decades to factor this into the price, so the actual event might not trigger a dramatic spike at all. The truth, it depends entirely on what Bitcoin's role in the world is by 2140. If it's the global reserve currency, the price could be astronomical long before the last coin. If it's a niche digital collectible, it might already have peaked. Bitcoin is often called digital gold, and the final coin moment is like the day the last ounce of gold is pulled from earth. In the gold market, mining still happens, but the annual supply growth is tiny compared to the total amount already above ground. The same will happen to Bitcoin long before 2140. The new supply will be so small it's barely noticeable. In fact, by 2036, over 99% of Bitcoin will already be mined. That means the last coin is more of a symbolic milestone than an economic shock. The real scarcity kicks in decades earlier. The big unknown is how miners will adapt. High adoption scenario. If Bitcoin is the backbone of global finance, the transaction fees could be massive enough to support thousands of miners competing for each block. Security stays strong. Low adoption scenario. If fees don't pay enough, miners could drop out, making the network easier to attack. This could trigger big changes like larger block sizes, new fee structures, or even a decision to allow more than 21 million coins, though that would be massively controversial. 2140 sounds far away, but the effects of Bitcoin as fixed supply are already playing out today. Every halving makes Bitcoin harder to get. That scarcity has been a major driver of past price surges. It's also influencing the way people think about money, savings, and inflation. The final coin moment is really just the end of a very long, slow tightening of supply, a century-long countdown designed to make every coin more precious over time. When the last Bitcoin is mined, the world will have witnessed something unprecedented. A currency that went from nothing to a fixed final supply without being controlled by any government, central bank, or corporation. It will either be celebrated as the greatest monetary experiment in history, or remembered as a bold idea that couldn't survive the real world. Either way, it will have changed the way we think about money forever. So, what happens when the last Bitcoin is mined? The supply freezes, miners work for fees alone, and the world decides whether the hardest money ever invented deserves to last for centuries or fade into history. The countdown has already started. Every block takes us one step closer. Want to understand Bitcoin from the ground up? Check out my book, Bitcoin Basics, the only beginner's guide you will ever need, available now on Amazon by Aurelius Grant.